In today's video, we're going to be having a review of the Aussie dollar from last week. I'm going to be looking at some expectations that economists have for the RBA, and of course, we're going to quickly look at what the results of NFP were. Hello, and welcome to another ACysecurities market update. My name is Alistair Schultz, and I'm going to be your host for today's trading journey. The first thing I'm looking at today is just an update on coronavirus around the globe. So far, we have more than 26 million infections. But we have heard some interesting figures from other countries saying that they have seen some levels of immunity starting to occur, particularly in some of the Scandinavian regions. Now, in addition to all of this, we've also heard a lot from vaccines moving forward and, of course, the FDA and what we're seeing from Trump and what his plan is before the election to get a vaccine widely distributed. Of course, some of the concerns that are really coming out now as well are about this idea of virus fatigue, where people are sort of getting sick of the lockdowns and not adhering to social distancing. So we'll have to keep an eye and very close eye on what we're seeing out of the US and of course what some of these vaccine manufacturers are doing in the coming weeks. Now, looking ahead at the Aussie dollar and what's gone on last week. Now, there was a number of key events that occurred. We heard a lot from central banks, mostly the Fed and also the RBA, but we've heard from in that time the Bank of England, and of course, we've also heard from some of the others like the Bank of Japan and a number of other entities that are outside of those. So some of those members in there have been discussing a lot. Now, the one that's seen the most impact has been coming from the Fed. And the reason being is that they've only just had that report that they're going to be changing and letting inflation run hot. So there's been a lot of commentary from Fed members in there that has affected the price of other markets. Now, you can see here on the Aussie dollar that we have a couple of implications of that, where we've seen Fed Bostic speaking, and of course, we've seen Kennard and a few others along the way. So definitely something to keep an eye on. Now, if you don't know quite what they said, feel free to pause the show right now, have a look and see via Google on what they have said and in their statements. Now, the other news last week was an NFP news week, so I will give you an update on that data further on in the video. But of course, we need to keep an eye on everything that's going on at the moment, because even though we're hearing about news in different markets like the Bank of England and the ECB, we're still seeing impacts on currencies we wouldn't usually expect it to, mostly because of trade-related issues coming out of it. Now, looking at non-farm payroll, we were expecting to see 1.3 million new jobs to be made, and we did get that number. It was just a fraction under, but so little difference that it really didn't make any change whether it was going to be good data or bad data. The part that was interesting, however, was what the expectation was for the unemployment rate. Initially, it was expected to be 9.8%. It was 10.2%. It is now 8.4%. I think that's probably one of the largest drops in the unemployment rate I've seen on record. Now, naturally, we've already heard from Trump and his tweeting saying that he is quite phenomenally ecstatic about what's going on in terms of recovery for the US. Some of the other states saying the same sort of things. However, there is some misconceptions here, and there are some people looking at perhaps the non-farm payrolls, obviously not accounting for the entire economy, makes it a little bit harder to manage and to really track as being accurate. Naturally, if you're taking out all the farming side of things, then perhaps those sort of seasonal employment numbers are likely to be down, and we're going to be seeing a little bit higher unemployment rate than we're expecting here. But nonetheless, the numbers are still pretty good. Now, moving on, there are some considerations I've been reading recently. The RBA has got an announcement coming out in the next couple of weeks on what they're planning to do with monetary policy. We know from the onset that we've heard they're not likely to do too much. However, economists are now starting to forecast that the RBA might increase or expand their quantitative easing program. Most of them are expecting it to happen towards the end of this year, perhaps the beginning of next year. Now, I'm expecting the same sort of thing. I think we'll find an expansion on the quantitative easing, but there are also some that are expecting to be some level of a rate cut or perhaps more targeting on that 3-year yield. Either way, we've got a lot to have a look at, and either the rate cut and of course the yields are less popular among analysts, with most of us looking at the idea of there being an expansion of monetary funding coming in. So definitely something to keep our eyes on, particularly considering what's going on with the Victorian situation. Victoria has extended its lockdown by another 2 weeks, and we may even see that go on longer because some of the numbers that they're talking about in terms of being able to reopen are frankly unachievable at this point in time. Now, moving on for today, I've got what's going on this week, some of the things that are really perking my interest. First thing is, we're going to be hearing from the first Brexit face-to-face meetings this week. So that's going to be the first time they've had a discussion since really the COVID situation started, where they're going to be face-to-face. So hopefully they will get a lot more progress than what they usually do because it is face-to-face, but we'll be unlikely to know until we hear the results of that. Thursday, we also have ECB monetary policy rates. So I'm interested to see if there is going to be further decline to the current interest rate, which is negative already. And from there on Friday, we have US CPI data that I'm going to be keeping an eye on. So they're really the big three of the week that I think are going to be useful. But of course, there's a lot more to look at. The news ahead of this week, today is a bank holiday for both Canada and the United States, recognizing for Labor Day. Now, of course, that's probably going to mean we're going to have a bit of a subdued market, or at least reduced amounts of trading volumes today. So bear that in mind when you are looking for news today to trade around, or even on patterns, because the chances are there's just not as much action in the market today. Now, of course, we also have NAB business confidence coming out later in the year, so that's going to be weak. So that's going to be good for us to keep an eye on to make sure we can see if the Australian consumer is feeling positive or negative about the economy. We then have a hearing from the Bank of Canada. They also have a monetary policy statement and a rate statement coming out this week. And then from there, the monetary policy from the ECB. Of these, I'm really more focused on what's happening out of the ECB than what I am out of the Bank of Canada. But nonetheless, something to keep an eye on, particularly given the trading situation with the US and Canada at the moment. Now, if there's anything from today's video you would like to get in contact with me about, please feel free to shoot me an email at talktoal@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.